The end of the crazy hot housing market is here, with interest rates peaking above 6% for the first time since 2008, while at the same time we're getting inflation readings at the highest level in over 40 years. And this past week, we had the Fed come out and raise the Fed funds rate 75 basis points, which is the largest single day increase since 1994. And because of all of this, we're seeing inventory levels rise, we're seeing buyer demand drop off. In fact, we're seeing 25% of the homes that are on the market have some sort of price cut. And this is leading to builder confidence. Builder confidence is being affected, which is affecting housing starts. And at the same time, you have Goldman Sachs coming out saying that the housing market will continue to slow sharply. And in today's video, we're going to walk you through what all of this data means as a buyer, as a seller, so that you have the information handy to make the best decisions for you. Before we dive into that though, I want to ask a favor. If you'll hit that thumbs up, it helps the YouTube algorithm. It helps more people see the content. As someone who likes to, provide useful information versus doom and gloom, I would appreciate you hitting that and getting the video shared out there. And at the same time, I'd love you to leave me a comment below. What are you seeing in the housing market as a buyer, as a seller out there? Maybe you're dealing with new construction. Maybe you have a property under contract. What are you actually seeing in this market? Do me a favor and leave that comment below. Now, as many of you know, I've been very bullish on housing. In fact, probably one of the most bullish real estate agents over the last couple of years with regards to how important it is to own a property. When everybody else was calling the crash over the last 2 years, I've been one of the few agents out there telling you how strong housing is and how strong it will actually remain. Well, it's starting to change a little bit. And I said I would always be transparent with you guys. I would always tell you when I thought things were changing. And we're in the middle of that shift at the moment. And things are shifting a little bit quicker than I thought they would. And it's because of interest rates. With interest rates peaking above 6%, that affordability play has affected a lot of home buyers out there. It's a 40 to 45% increase with regards to monthly payment for many well-qualified buyers. And that's put the brakes on buying for a lot of people out there. And that's something that I didn't think would happen so quickly. But at the same time, it's a weird shift because we are still seeing activity on listings. Just homes aren't selling as quickly as they were, 6 months ago. And it's kind of a weird shift because, open houses aren't nearly as busy, but people are still out looking at property. They're just not making offers, which is why you're seeing inventory continue to build. Now, I've said it before, we're going into that time of year when things are going to slow down naturally with kids out of school, people taking vacations. This year's probably going to be a little bit more dramatic though, because, of the shift in rates and, things being way more expensive. Buyers out there are going to just sit on the sidelines and just wait to kind of see how the market plays out, unless you're a buyer that has to make a move for, maybe a family situation where you are, or maybe you've sold your house and you have to buy something else, or maybe you're moving to a new area and you want to be a homeowner versus a renter. You're not really going to see a lot of people taking that leap in this market unless they believe that home prices are going to continue to go up, or unless they believe that at some point in the future, interest rates are going to come back down and they're going to be able to refinance. But you shouldn't be buying a house, based on either of those scenarios. You should only be pulling the trigger in this type of environment if, you're planning on being in the home for an extended period of time, like we've talked about in many videos, 5, 7, 10 years. Having money in the bank, not stretching yourselves. Those are the things that you need to consider in this environment. It's not always a good time to be a homeowner, or a home buyer rather. And at the moment, we're seeing that play into full effect. It is difficult out there to be a home buyer because of this shift in the market. And I'm seeing it on listings that I have. The lower end price point, those homes are still getting showings. They're still getting quite a bit of activity. But crazy enough, they're not getting offers like they were a couple of months ago. I have a listing at the moment that is priced correctly in that lower price point. It's getting showings, but it's not getting offers, and that is showing me that there's a change happening in the market. Not only are we seeing inventory levels rise and buyer demand drop off, we're just seeing people take, a hiatus, if you will, from the process to say, you know what, I'm going to wait and see what happens with the market. I don't want to pay, X amount for this property, or I'm not willing to stretch myself to buy this particular property at this particular time. And therefore, homes are sitting a little bit longer. And I've got homes that are in the higher price point above $1 million that are also sitting, not getting the activity. Now, you would think with me saying that means the market is slowing across the board, that no one is buying or selling. But there are still homes going into escrow. The problem with the market that we're in at the moment is it takes a couple of months because a lot of the data that's out there is somewhat lagging data, right? Homes that are still closing escrow right now went into escrow 30, 45 days ago. The slowdown that we're seeing at the moment isn't really going to hit the numbers until the end of summer, which is a time of the year when things naturally slow down as well. And so I believe as we continue to move through the summer, the market is going to continue to slow. Now, the question is, what happens with regards to house prices? Now, people are going to think I'm crazy. I just don't see big moves in house prices. Why? Because unless you're a seller that has to sell your property, you're probably just going to stay put, especially if you have a super low interest rate locked in. There's two factors playing into the economy at the moment that is completely different than the last time we went through this. And the first is rising rents. Rents continue to rise across the board. The last time we went through something like this, it was much less expensive to rent a home. And many people were willing to walk away from their homes because they could go and rent something for much less money. Well, that's not the case now. In fact, many buyers out there, the reason that they purchased is because it was cheaper for them to own a home than it was to rent. And homeowners at the moment have $27.8 trillion of equity locked into their property. Majority of homeowners out there have a lot of equity. It's expensive to rent. Therefore, sellers stay put in this environment. But the caveat is buyers also stay put. They don't make decisions in an environment like this to buy property unless they absolutely need to buy a home. And therefore, homes are going to sit on the market a little bit longer, which means the number of sales continues to decline. And at the same time, appreciation slows. You're going to see more and more homes sell for less than the original asking price. Now, I will say it again, I don't believe a crash is coming, but I do believe this slowdown is going to continue to affect where sellers price their homes, or at least it should. But the slowdown is going to allow more inventory to build if sellers are willing to put their homes on the market. Now, nationwide, we're only sitting at about 2.2 months of actual supply of homes. And in order to get to a balanced market, we need 4, 5, 6 months of homes. And while we still have a ways to go on that, I do see inventory continuing to rise and the shifting starting to happen where it's not going to be a buyer's market, but it's definitely going to be less of a seller's market. Those buyers that want to buy are going to have more say in how the transaction goes versus, over the last couple of years where it's been dictated really by the seller. So I see the slowdown continuing. I don't see a crash coming, but what I will tell you, as the slowdown continues, it continues to affect our industry. You're going to have more layoffs with regards to mortgage business. You're going to have more agents going to try to find another job because they're not able to make it in this environment. Those agents, they got in the business over the last couple of years because the market was so hot and it was such an easy career and you can make money so quickly. A lot of those people are about to have their eyes open. It is becoming more and more of a professionals market, not only on the real estate side, but the mortgage side. So, just make sure if you are a buyer out there, and or a seller, you're working with a professional, somebody that understands this business, because the shift is going to continue to happen and it's going to continue to put pressure across the board. So my tune is definitely changing a little bit because the slowdown is affecting, what I'm seeing out there in the market. But like I mentioned earlier, it's not a crash, it's a slowdown. It's one that we've talked about would happen. I just don't think I thought it would happen quite as abruptly with the rise in rates, but it's here. So just know if you're a buyer out there, If you're a seller, you're making the right decision for you. And if you're wondering if now is the right time to buy or wait, do me a favor, check out this video here. I dive into it in more detail. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.